Welcome back to Wall Street Confidential on TheStreet.com TV. Big news out of Citigroup. It actually sparked a downgrade of the stock this morning, an announcement that it is doing $49 billion worth of SIVs, 7 SIVs. Well, Jim Cramer, you're calling this a $49 billion black hole. You put them in the same sentence as Enron.
Well, I mean, anytime you have off-balance sheet obligations that aren't easily available to see when you look at the company's financials, you have an Enron situation. That was really what Enron was doing with the Raptor portfolio, which was just a lot of obligations that you didn't realize. These were always Citi's obligations. I don't know why they were able to be off balance sheet. It seems like that the accounting profession just routinely lets us down. Dick Beauvais says that the dividend is not going to have to be cut. I don't know how they don't cut the dividend, frankly. I own a fractionalsplus.com. It's my biggest disappointment this year. I feel very strongly that Pandit can undo everything that was brought in by Prince, but he would have to undo first the ridiculous hedge fund acquisition that brought Pandit in. I look at the SIVs and I always say it's AAA, AAA, AAA. Now, when you see AAA, it's a meaningless concept because the ratings agencies didn't really focus on what they put AAA on, and the defaults on AAA paper are running very high. We see that from Countrywide. Well, although it's not self-evident, what happens is a AAA piece of paper is reduced to a very low-level piece of paper, though the ratings agencies don't seem to understand this, when you attach a home equity line of credit to it. And I think that the SIVs, if I could see exactly how much had second lien mortgage against it, I could tell you how bad it was. That's why I call it a black hole, because I don't.
Now, they're saying that this move by Citigroup, it sort of cancels out the possibility of that $100 billion super fund.
That was always
Citigroup
a joke.
and
There's
JP
lots
Morgan.
of jokes being floated. Look, I'm very jaundiced about everything I hear about the mortgage market because it all comes down to one thing. If housing prices go up, we're fine. If housing prices go down, it doesn't matter what the government does. It doesn't matter what the Fed does, short of cutting interest rates. We have to make it so people want to buy a home again. And there isn't anything that's being done to make that happen. Now, Bob Toll says it's psychology. I say it's supply-demand. They're going to probably make 850 to 900,000 homes next year. Household formations running 865,000. We have $1.25 trillion in overhang in inventory right now. If housing starts were to go to 400,000, we would get a bottom.
All right, we're going to talk more about that psychology of the housing market and the Fed's role with that. Thanks a lot, Jim Cramer on Citigroup. You're watching TheStreet.com TV. Stay tuned.